Pause muna sa pag-scroll ng inyong news feed.
Eto, tignan ang bagong look ng logo ng Facebook company. Hindi na thumbs up o yung like na emoji, ay hindi ko pa nakikita to, kundi asul na infinity shape na ito.
Diba? Mukhang potato chip siya actually.
Tatawagin na itong Meta, short for Metaverse. Ayon kay Meta CEO Mark Zuckerberg, parte ito ng pag-rebrand ng Facebook.
Layunin daw ng rebranding na bigyang diin ang pagbubuo ng virtual realm kung saan lahat ay konektado. Nangyari ang rebranding sa gitna ng mga batikos sa market power at algorithm decisions ng Facebook. Pero ang Facebook application na gamit natin ngayon ay Facebook pa rin naman ang tawag.
Okay.
Relax.
Relax.
Good day, everyone. We are here now to talk about one of the large tech company, the Meta Platform Incorporation, or formerly Facebook Incorporation. This is the large tech company with a varied service and product, and when it comes to the identifying risk associated with Meta Platforms Incorporation, we can consider several potential of areas concerned, and I know that you are all aware and know about this several potential areas of concern, right? Okay, so right now, my secretary will explain thoroughly about the several potential areas of concern that need to be considered. Okay.
Hi everyone, how are you? I'm here to explain specifically the several potential areas of concern that need to be considered by the Meta company known as Facebook. They face several potential areas of concern. The first is privacy and data security remain paramount or most important to them, especially with the vast amount of user data they handle. Regulatory scrutiny and public backlash also are ongoing challenges. Second, content moderation and misinformation on their platforms demand continuous vigilance. Balancing free expression with preventing harm is a delicate task too. Third, competition in the tech industry could threaten Meta's market dominance. And finally, ethical concerns around the use of AI, augmented reality, and virtual reality technologies must be addressed to ensure responsible rather and equitable deployment. And now I know and I believe that Leia Dagatan or Miss Dagatan is right there to explain to you the financial statement of the Meta company. So you may continue.
I'm Miss Leah Dagatan, was also here to present to you the financial statement of the Meta company. When we talk about financial statements, it's all about the balance sheets, income statements, and cash flow of the company. So the balance sheets of the Meta company is the total assets in the year 2021 is $165,987, and in the year 2022, their total assets is $185,727. So their total asset is increasing in the year 2022 than the previous year 2021. So in the total liabilities and equities is about to in the year 2021 is about 165,987, and in the year 2022 is 185,772. It means that the total assets and the total equities is increasing, and it means that their business operations is good or profitable. The business is in their revenue in the year 2021 is $117,929, and in the year 2022 is $116,609. So the total cost and expenses is in the year 2021 is $71,176, and in the year 2022 is $87,665. So in net income of the Meta company's income statement is in the year 2021 is 39,370, and in the year 2022 is 23,200. So the year 2021 in their net income is much higher than the year 2022. So their net income is decreasing in the year 2022 than the year 2021. So in cash flow statements is in their cash flows from operating activities is from the year 2021 and 2022. So their net cash flow provided by operating activities in the year 2021 is $57,683, and the year 2022 is $50,475. So their operations is maybe declining or decrease than the previous year 2021, and their cash flows from investing activities, their net cash flows from investing activities in the year 2021 is 7,570, and in the year 2022 is 28,970, so much higher than the year 2021. And the next cash flow from financing activities is the net cash flow from financing activities in the year 2021 is $50,728, and in the year 2022 is $22,136. So in their net cash used in financing activities is in the year 2022 is less than the year 2021. So with this, their mission is to give people the power to build community and bring the world closer together. While the metaverse is in the very early stages of its development, we believe that it will become the next computing platform and the future of social interaction.
And also, all of their products, including their apps, share the vision of helping to bring the metaverse to life.
Yes, that's correct.
Now we have here the Metastack analysis. It was released March 3, 2023, where Metastack dropped by 76% from the all-time high. And this is because the company continues to invest heavily in the Reality Lab venture, where revenue dropped by 1% compared to the prior year. So the gross margin was 78% with a decrease of 3% compared to 2021. And the R&D expense increased by 43% due to the investment in Reality Lab. So the G&A expense increased by 13% compared to 2021 due to the restructuring expenses. Diluted EPS is $8.59 with a decrease of 38%. And the DCF valuation of Metastack indicates a per share price of $224.25, where the current share price is undervalued by 26%. And the stock is currently trading above the 250 days moving averages, suggesting that the stock is gaining momentum.
So let's take a look at what these heavyweights have to say about Meta platforms before we discuss the reliability of brokerage recommendations and how to use them to our advantage. Meta platforms currently have an average brokerage recommendations ABR of 1.36 on a scale of 1 to 5, strong buy to strong sell, calculated based on the actual recommendations buy, hold, sell, etc. made by 35 brokerage firms, and average brokerage recommendation of 1.36 approximates between strong buy and buy. Of the 35 recommendations that derive the current ABR, 28 strong buy and 3 are buy. Strong buy and buy respectively account for 80% and 8.6% of all recommendations. Brokerage recommendations trends for Meta and for the recommendations analysis are often relied on by investor when deciding whether to buy, sell, or hold a stock. Media reports about this brokerage firm employed or sell side analysis changing their ratings often affect a stock price. As a result of the vested interest of a brokerage firm in a stock, they cover their analysis tend to rate it with a strong positive bias. According to the research, brokerage firm assign 5 strong buy recommendations for every interest and not always aligned with the retail investors, rarely indicating when the price of a stock could actually be heading. Therefore, the best use of information could be validating our own research or an indicator that has proven to be highly successful in predicting stocks price movement. Our proprietary stocks rating tool with an impressive internally audit track record category stocks into 5 groups ranging from rank number 1 strong buy to rank 5 strong sell, and this is effective indicator of a stock price performance in the near future. Therefore, using the average brokerage recommendation or ABR to validate the rank could be an efficiently a way of making a profitable investment decision. Looking at the earnings estimate revision for Meta Platforms, the consensus estimate for the current year has increased 7.2% over the past month of $10.50. With this analysis growing optimism over the company's earnings prospects as indicated by strong agreement among the them in revising EPS estimates higher could be a legitimate reason for a stock to soar in the near term. The size of the recent changes in a consensus estimate along with the 3 other factors related to earnings estimates has resulted in a rank number 1 a strong buy for a Meta Platforms. Therefore, the buy equivalent ABR for Meta Platforms may serve as a useful guide for investors.
Meta, formerly known as Facebook, faces several potential risks that could impact its future performance. So, one significant concern is increased competition in the social media and technology sectors. As Meta expands its metaverse ambitions, they face competition from established tech giants like Google and Apple, as well as emerging players in the virtual and augmented or an increased reality space. So these competitors could innovate rapidly and capture market share, potentially eroding Meta's dominance. So moreover, regulatory scrutiny and antitrust investigation may lead to restrictions on Meta's business practices, affecting its ability to acquire companies and stifle potential competition. So with these economic factors also pose risk to Meta's performance. Economic downturns can lead to reduced advertising budgets, which is a primary source of revenue for Meta through platforms like Facebook and Instagram. So a decline in user engagement or a shift in consumer preferences could further impact ad or advertisement revenue. Additionally, rising privacy concerns and stricter data protection regulation could hinder Meta's ability to collect and monetize user data, affecting its advertising-based business model. So, in the end, these combined risks highlight the need for Meta to diversify its revenue streams and navigate regulatory challenges effectively to ensure its long-term success. So, that's all.